When the Fed changes rates up or down, every real estate agent and mortgage broker all over the country get on, the Fed just lowered interest rates. It's like there's this miracle thing. They lower rates a half a point and you're going to get a half a point less in mortgages. Well, then why every day do rates change? 9750 WFRE in California and Washington State.
That is a great Pitchman radio voice.
Thank you.
You've reached the We Fixed Real Estate podcast.
Yeah, WFRE, but there actually is a WFRE, so we thought we'd throw our buyer broker fee in front of it. 9750 WFRE. I think we need t-shirts, dude.
There you go.
Black t-shirts, of course.
I like it.
Yeah, there you go. Yeah, I'm
actually not allowed to wear a black t-shirt outside of work now. My wife put a stamp on it. This is now just officially my work clothes.
I was looking at my Gap t-shirts that I buy for on sale, $7. I mean, it's the best deal in the world. They're nice, they're cotton. And I just remember like buying suits and spending ties and it's like, I don't miss it. This is like the California uniform for work.
It is.
And yeah, it's just, we get it. You people back east still dressing up. Nobody cares. I don't know, but we have to keep the high-end haberdasheries in business or something.
Yeah. Oh, yeah. And if you want to see Fred in a suit, check him out on CNBC.
That's right.
You can YouTube that.
We have to one day do a podcast and interject the little CNBC things. They're actually, some of them are pretty funny. Oh, yeah. One crazy thing about that, I was arguing against a guy, debating. And he just had this very weird eye thing going. I didn't notice because I'm just talking into the camera. And it ends up the next week, a friend of mine calls me at 11:30 at night, says, dude, turn on Letterman. I said, what? He says, you're on Letterman.
Whoa.
So it ends up, Letterman did a little bit showing me as the talking head talking and the guy next to me with the goofy eyes. So I was on Letterman.
Oh, that's awesome.
I know. It's my claim to fame of late night.
That's got to be out there somewhere.
Yeah, I should have my own IMDb page for that. It was hysterical when I found it out, cracked up. But yeah, you never know what happens to you when you're on big time TV. But nowadays with the politicians. By the way, I wanted to make one really important point. When the Fed changes rates up or down, every real estate agent and mortgage broker all over the country get on, the Fed just lowered interest rates. It's like there's this miracle thing. They lower rates a half a point and you're going to get a half a point less in mortgages. Well, then why every day do rates change? And it got nasty the other day because 3 Fed chairmen said, we better raise rates now to curb inflation. And everybody else said, hey, let's just stay the same. These 3 guys aren't stupid. There's a reason. They're reading the data. So take an ARM now. Don't even bother with the fixed rates. Don't even look at the fixed rates. They're ridiculous. Get a 5 or 7 year ARM in the high 5s. At some point, we're going to be out of this nightmare economy. And pray. This is what you want to go pray for something. If you're a person who prays, this is what you pray for. Pray for the fact that the Japanese do not need to sell treasuries. Okay. The Japanese, if you nerd out on this stuff and know it, I apologize, but just the basic thing. Japan's kind of in trouble with their yen. Their yen was just devalued. So they had to prop it up or they were going to collapse. So the United States, what they could have done is just sold U.S. treasuries and they would have been whole. But instead, the U.S. made a deal with them. Like, look, we'll take care of you. But the U.S. didn't sell treasuries. They sold euros that they had in their central bank. So it didn't affect them. And it wasn't enough to hurt the EU prices. So they prevented interest rates from going up another half a point. Okay, so that was a good thing that they did this week, but let's pray that's the end of it. And hopefully there's no more bullets in the chamber if we need to starve off economic issues. That's Japan. Look what's going on in Korea. The Korean stock market dropped like a rock, and especially the chip stocks. So we all know there's an overblown in chips and AI and all that stuff. And is it going to crash or is it going to moderately come down a little bit? Then eventually it's obviously all going to go back. But everybody's trying to get in at the same time. And that's what's also causing housing to go down because people are, I don't know, rates are too high. Mm-hmm. But the strategy that people who don't care about rates do is they take an adjustable. They take a 5 or 7 year ARM. They take a 1 or 2 year temporary buy down in a rate. There's a way to solve the issues of high rates for you on a temporary meaning 5 to 7 year basis, or could go anywhere from 1 to 7 years because the 10-1 ARM is terrible right now. But most people are afraid of the risk. But you're going to refi anyway. Look at the stats. People refi every 7 years, because rates go up and rates go down. So don't be scared about doing that. Be scared about those option ARMs, but that's a whole different story, which we don't have anymore.
What if you locked in your mortgage like at 2.7? You're not going to refi that.
Mazel tov, as they would say. Yeah, but I saw a property with a client in San Diego. Well, I didn't see it. Another guy saw it. They had a 3.25% assumable VA mortgage.
Whoa.
Yeah. But remember, it was probably for like $1.8 million, and it's down to maybe $1.5 million. But the price of the house was over $3 million. So you have to make up the difference. Mm-hmm. So in a place where values haven't gone up or they've gone up and come back down, you paid down a little bit of the debt, you still got to come up with the difference in cash or a second mortgage, usually allowable up to 95% loan to value. You have to check on that, depending on the situation. But yeah, there's ways to squeeze it. There's a website out there that you can go to. I don't remember the name, but it'll show you every house that's listed that has an assumable mortgage on it. It doesn't say it's available. It doesn't say they're going to do it. It doesn't say it makes any sense. But any real estate agent with a brain would put that right in the description to the public. Just a 3% assumable mortgage balance.
How does the assumable mortgage work? I mean, the person doesn't.
You have to qualify for the assumption. So you can't just, have 7 bankruptcies walk in and take over someone's mortgage. And by the way, there's idiots on TikTok who say, what you do is just go in and tell the people that you'll make their mortgage payment instead of them. And then you do this special kind of deed. No, there's what's called a due on sale clause, meaning if you sell it to anyone else, then what happens is your mortgage has to be paid off. So they try all kinds of elaborate things with, 29-year leases with an assumption fee of $1 or some kind of crap. That's like horrible. That. But it is. And if these characters come to your house and say, hey, I'll buy your house for you, do that. No. Use a real estate agent so you can get out in the public to everyone so they can describe your situation. Don't listen to these wholesalers. They're horrible. I get these things all the time. Hey, have any off markets for me? I'll let you list the property. Like, no, dude. I want to get it out in the public so that everyone can see the property. That's the idea. More buyers, not just you, because you want to make a profit on flipping it. Boy, the coffee worked this morning.
So I think you've got a mea culpa.
Yeah. I know how I've been saying and blasting. Oh, it's summertime. It's slow out there. It's dead. It's August. Everybody's away. You have the Tour de France avec Femmes avec Swift. We got everything going on. Anyway, and that Tade Pagacha, I mean, the dude is insane. And he's going to be in the Vuelta. So all you bike freaks know what I'm talking about. Anyway, yeah, so I'm thinking, it's not going to be as crazy. So I had these clients. Let's start with the first one. Looking to purchase a small single family, 2 bedrooms, 1 bath in the dog patch of San Francisco. If you know, you know. But nice house, clean, nice backyard, 2-car garage, listed for, you ready for this? $1.399 million.
What?
Wow. Yeah, exactly. And guess what company this person works for, who's the listing agent. Anyway, you can pretty much guess.
So it's a waterfront neighborhood in San Francisco between Potrero Hill and the Bay. I need to look that up.
There you go. Yeah, it's a cool area, and you go right up. There's a bus that runs right into downtown. It's a good location. They have a lot of cool old buildings that were converted into lofts and things like that. So anyway, we put our bid in. We put our first round bid at 1.8 with a 2.5% buyer broker fee. So I get a phone call from the agent. You know how much I love phone calls. And we find out, she says, we had 8 offers. Your client was in the top 4. Okay, cool. And the other 4 were ridiculous. You know, those are with people who don't understand, agents or people who don't understand the market. They weren't getting a deal on this. So we went round 2, and on round 2, my client said, all right, let's go for broke on this. I'll do 1.86, but I'll waive the 2.5%, which added basically another 40 some thousand. So he basically went up $100,000. So he's now at 1.9-ish. We get the seller's multiple counter offer. And by the way, that second offer was after she called. She said, look, I'm meeting with the owner, you know, if you want to make a better deal. So the counter offer comes in last night. All our terms were fine. Remember, we're not paying a buyer broker fee. So now that's like 50,000, 60 was, it's now at 2 million times 2.5, whatever that number is. So it's a lot more money. And we come back at 1.91. It's like, okay, we're done after that. We lost. Whoa. We came in second place because she asked if we wanted to be a backup. But I don't know if they got 2 million, but they might have gotten 2 million with 2.5%, which still would have been a little better than our offer, I guess, or who knows? We'll find out. But what we end up finding out is just the sale price and who the buyer broker was. We never find out what the buyer broker fee was. And if you think about it, and I've complained about this to appraisers, to the appraisal world, I should say, why aren't you separating the hard costs from the soft costs? When you do a comparable, you got to take out 5% if that was the amount of money that was paid for the soft cost to get what the hard cost, what the property's really worth, based on paying all these commissions. So if you look at it now, if you buy the next house, and let's say you buy it's a friend of yours and you just decided market value, and that market value is 2 million. Well, you just paid for the house plus the commissions that you didn't pay. See what I mean? That's the insanity about this. And I'm sure I'm going to bitch and moan about it forever and nothing's ever going to happen. But here it is, kids. just giving you the basic layout, the basic math. Now, the other crazy thing, and this is another thing that blew my mind. I had a client looking at a house a while ago. Price came down. They went back to look at it. Nothing. We waited about a week and a half. figuring nothing's going on with this house. We submit an offer. First of all, we submit it with our title company that happens to do escrow because they're inexpensive. I've talked about this before. This is in Southern California, of course. I actually put it into the contract so he has to show the seller, unless he's smart enough to know how to take out a PDF page, but he has an Earthlink email account. I swear to God, this agent with an Earthlink account. And he said, "Oh, I don't know. Everything goes to spam. I'll have to look for it. Just let me know it's there." What a system. What a system. And
so you have to text him or call him to tell him to look in his spam folder?
Yeah, you have to text him to tell him to look in the spam folder. It's just insane. Anyway, so he comes back and they do a multiple counter offer. And he first says, highest and best price, which actually is the wrong thing to put in there. You can't put that. How is that? If I just sign that, it's a contract, whatever that means. It's just, they don't understand. It's contract law. Anyway, he wanted, of course, to use his title and escrow company, especially his escrow company. He doesn't care about title. The escrow company gets it. And, I said to him, let me know what their prices are and all that. I mean, or we'd really like to use Fidelity. Did you tell your seller and you see the prices? And he says, non-starter. Dude, okay. So anyway, we come back with another offer from my clients. I said, don't worry about it. I'll fix it after we get under contract. And of course, he said there were 5 bids. Like, where did they come from? We send in an offer with no notice, no nothing, no offer date, but all of a sudden 4 other bids appear. This guy BS'd his way with every client who's ever seen the place, and the price came down, but it didn't come down that much. And we lost it. We were in second place again because of our terms. I don't even know what that is. We asked for, 5 days for inspections. That's it. No mortgage contingency, no appraisal contingency. So I don't even know what he's talking about. He must have wrote that to somebody else, but sent it to me from his Earthlink account. I don't know why these big companies allow this. I mean, because technically
they shouldn't.
Every bit of email, every email you ever send that has anything to do with anything within a transaction, especially the California DRE, and I'm sure in Washington, I know it does, you have to save every email. You have to save every text. So what happens when somebody leaves Compass and they've been using their Gmail account, and then there's a problem with the thing and the state comes in? Guess what? You guys are, just dealing with things that you just ignored. The compliance is so easy. You just keep it all in one place. That's why we love Slack channels. Everything is in there. Everything. So, if the DRE came in, I'd just say, here. Anyway.
Access to your Google Workspace.
Yeah, exactly. So I'm wrong. And now on my listing in Cortez Zapala and Morgan Hill, we're starting to get busy.
Are you?
Yeah. We had like 5 different people.
That's that really large place, right?
Yeah. Yeah. I love this couple. I mean, they're just so sweet, and I feel bad, and we all feel bad, and we're all just, rock and roll and trying to get it closed.
I bet it sells before the school year.
I hope so. I hope it sells before this podcast comes out. So, yeah, so it's crazy. So that's San Francisco. Oh, and this was in Studio City, to give you an idea. So, for 2.4-ish million area. So there's 4 other people who lost the house now. So it's still busy. But anyway.
So the summer doldrums are really, can't predict it.
Yeah.
Some things you can see the writing on the wall, but it doesn't always happen the minute you think it's going to happen.
I mean, I think, what was it, like 5 years in a row, I did a deal on Christmas Eve or Christmas Day. So you never know.
I remember that.
Anyway, last thing, I had a client ask me about title insurance.
Mm.
Who pays for it, and why do I need it? So let me start with who pays for it. So in California, the way it works, Washington State is much simpler. In California, every single county has a different situation and a different normal and that people do. There's some places where the seller pays the escrow fee and the title insurance. There's some that split the escrow fee, seller pays the title insurance. And some the buyer pays escrow fee and buyer pays the title insurance. And it has to do with what kind of a deed they are giving you. I won't even start explaining that because it'll take hours and it'll just get you confused. Don't worry about it. Anyway, so the idea with real estate agents is who's ever paying that title insurance, which is usually the largest charge, especially if they're paying title escrow, they get to choose who the company is. So I'm going against in Los Angeles, it's buyer and seller split the escrow and the seller pays the title insurance. So there we go with my arguments for all that. But anyway, so why do you actually need it? But anyway, there's a website called whopaysforwhat.com that you can try to go to that we're going to make even better soon. But just to give you an idea, who pays for what the city taxes are. In every county, the seller pays the county tax. Washington State, by the way, the seller pays everything. So you don't choose, they choose. Everything's fine. And these are all,
that's a quick who pays for what page for Washington.
Yeah, no sense in doing it. But anyway, let me explain title insurance. The first question he asks is, if there's already title insurance to the property, why do I have to get it? Good question. Here's what title insurance, the effective dates of title insurance. When you buy a property, the day you close is the day you get the insurance that is for back in time. It's not like car insurance where if you damage it 3 weeks later, they pay for it. No, this tell me anything that happened in the past, because the title insurance company is guaranteeing that whoever signed the deed and transferred the property to you is the one who really owned the property. And also there's no liens or encumbrances, no back taxes. So if some guy named Louis comes to your door and says, hey, this was my cousin's house and she gave it to me and I have this proof, well, go to the title company, because you can't just get the house. You have an insurance claim. So that's what title insurance is for. So everything being digital, the likelihood of a claim is like 0.001. So title insurance is, I won't call it a racket. They do work and they guarantee things, but you kind of have to do it. Except Fannie Mae has come up with a thing when you're doing a refinance, because the refinance title insurance is from the day you bought the day you refinance on back to the day you purchased.
Mm-hmm.
And they are using attorneys to just review the titles, the updated title reports, because they're not really worried about anything else, unless it gets into weird stuff like it just did a total renovation and the contractors may or may not be paid because they can file a claim if they're not paid. So there's a whole bunch of stuff like that. But anyway, it works going back in time. That's the biggest thing I want you to realize. There are two types of policies. One is an owner's policy. That's for the sale price. And then there's a lender's policy that you pay for the lender, that is for the loan amount. Now, I've had people say, you know what? I don't want any more title insurance than the amount of the lender's policy. You could do that. You don't have to pay. If your purchase price is $2 million and your mortgage is $500,000, if you want, you can pay for just $500,000 of owner's coverage, but you have to get, but you have to get owner's policy if there's going to be a lender's policy. If it's a cash deal, you're not required to get title insurance.
Really?
Yeah, but you're taking the risk.
Yeah. Especially
if you're a real estate lawyer and you know how to investigate these things and you can guarantee to your client it's not going to be a problem, then, maybe he saves X. But yeah, so that's the whole thing on title insurance. I just wanted to tell you kind of the basics.
Is title insurance more expensive on an older home that has
there's like 5 or 6 different companies in California. And by the way, they each get licensed in every county. And they have to file a rate card with the state of California. And this is in every state. And they're all basically every company is basically the same in the dollar. So it doesn't matter on the type of house. They're insuring the title. They don't see the property. They could care less about the property itself. They have, the boundary lines. Some states require a survey. Some states don't. So title insurance doesn't guarantee your boundary lines. That's another big thing. They're just, the city said this is the legal description, or the county, this is the legal description. That's all they go by. So they don't do measurements.
I learned something. I would have thought that an older home that had like 10 owners would require more diligence than
no, because it got title insurance 10 times.
Oh, I see. Because
it's even better.
Because then the next title. Oh, I see it.
Yep.
But does it's got title insurance 10 times, but does each one replace the previous one, or can you go back through the?
No, but if you think about it, it's the time periods. He had title insurance for these 2 years, and then he sold it, and then a person lives in it 3 years, then the new person got title insurance. It goes back forever. So just because the last one issued a title policy, and they know who issued the last policy, it's recorded.
What about like somebody coming back from like 1965 that had that title insurance messed up, and they really did have claim to the home?
Drew, get a life. Okay.
That means we've come to the end of We Fixed Real Estate. I'm going to go find a life, and we will talk to you next week.
9750 WFRE.